we've titled our presentation Inflation, Deflation, and if you're ready, it quite frankly should be irrelevant. I think one of the main flaws in our sector, in our vertical, in our ideology, is that we're always so focused on inflation. Everyone's just, we're always talking about hyperinflation and the Fed and what if it gets out of control and they're going to be debasing the currency, which is 100% correct. It's a great thing to focus on, but Jeff earlier this morning referenced the Thomas Jefferson quote, which is one of my favorite TJ quotes. The other half of the scam is the deflation part of the scam. So if they were just printing money and credit was expanding and goods and services and asset classes were just being bid up, it wouldn't be that hard to protect ourselves. What makes it difficult is during the deflationary times when credit and money retract and all the asset classes crash. And this isn't theoretical. You saw it in 07, 08. You saw it in 01. You saw it in 87. You saw it for the Great Depression. The liberal messiah, FDR, had the country struggle for 15 years and they still, kiss his ass. But the other half of the equation is deflation. And so we don't like to talk about it because we're a bullion dealer, for Christ's sake. So we're big, we preach inflation, but deflation is real. The thing to focus on, it doesn't matter if you follow the Austrian School of Economics or University of Chicago, the Monetarist School with the Friedmanites, et cetera, is the money supply. Money and credit expand, money and credit retract. When money and credit expand, inflation 101, they bid up goods and services, they bid up assets, things get more expensive. All right, they also can retract. Credit crunches, debt deflation, destruction, et cetera, that causes goods and services to become cheaper, that causes asset classes to crash, et cetera. The true money supply, and I know people will come up here and talk about, the true money supply could never be measured real time. For you to understand, money, it's an organic, money and credit, you can't, if you happen to quantify it, all you're getting is a snapshot into the past. Every time a credit card is swiped, it's expanding. Every time a loan is paid off, it's retracting. Every time, it's just a living, breathing, up, down, up, down, up, down. And even if you're quantifying it, you're looking into the past. An astrophysics analogy would be when you're looking at the stars and whatever, it already happened. You're looking at the past. It just took 186,000 miles per second to get to you. So we don't necessarily try to quantify it, but we know that it's possible. It expands and it retracts. So let's dive into the assets, what protects you from what, and anyone blurt it out from the audience. What happens what would be the best thing you could have when the market crashes? If you were sitting there in 07, 08, and you were brilliant, what would you want to have in your possession? Well, I'm not talking about retail investor shorting, I'm talking about simplify it. Cash, exactly. You'd want to have cash. You'd sit on the sidelines with cash, you'd watch everything crash, and you would dive in with the liquidity and start buying assets for pennies on the dollar, on the cheap. Most people don't want to tell you that because fiduciaries make money from working with your money, not from you sitting on your money. So, but it's a sad fact. Cash, and I don't know how conspiratorial you want to get, but also if the zombie apocalypse starts tomorrow, no one's going to know what a silver eagle is. The zombies are going to trade in fiat in the short term anyway. So cash does protect you from deflation. Things crash, you could jump in cash and start buying things on the cheap. Other assets could protect you as well, but cash is the simplest form. Someone in the back was yelling, if you're savvy enough to put on shorts and puts, and as a retail investor, you want to be sitting there monitoring it all the time and know when to call off and how much you want to leverage. A little bit more difficult for retail investors, but the simplest caveman portfolio is 50% cash, 50% gold, and you really don't care what the central bankers think. You're covered for inflation, you're covered for deflation, et cetera. There are obvious anomalies that could occur, meaning that cash is great, but not if they freeze your bank account or confiscate it or capital controls or whatever. So I actually would encourage everyone to hold the cash position off grid, in cash, old school, under the mattress, however you want to call it. Then you just have to worry about your wife and girlfriend robbing you, not the government and the banks. So, low blow, I know, sorry, that's a cheap shot. The inflation hedges are obviously we talk about them all the time. Gold, silver, which is what we do, equities, currencies, et cetera. But yeah, again, I think our sector and our ideology don't look at the flip side of the coin, which is, again, these things do crash. We might be seeing the early signs of it right now, right? The last 9 months have been utter chaos around the globe. So yeah, there's a good chance that if you had a liquid position, regardless of what currency you're talking about, you could, after this thing crashes, you could come in and buy things on the cheap. So what do? My company, Perpetual Assets. We're bullion dealers. That's the simple thing. And I'm up here talking about fiat like an idiot. But our main service, our main solution is the LLC IRA, which is it's a vehicle. It's a self-directed IRA, but within your IRA, it's a way that you guys could you become the manager of this LLC, which your IRA buys. Most clients come to us, and this is where our solution is unique to other self-directed IRAs. Most clients come to us because they want to take physical possession of their IRA metal. Our solution allows your IRA buys this LLC, you're managing the LLC. Our solution allows you to take physical possession, but our solution also allows you to invest in almost anything. You run this LLC, and as manager, you get to decide what assets it holds, what it buys, if you want, whatever allocation, et cetera. We don't tell you what to invest in. Our generic slogan is, trust yourself. We kind of use our motto is we want to make it impossible for anyone to screw you except for the person you see in the mirror every day. So, yeah, that's the goal of our solution. But it doesn't matter if you're talking about inflation or deflation. That's our solution allows you to hedge against either position and invest in literally almost anything. I'm going to hand it off to Will here.